Thank you so much for joining me here. I'm Don Ma. Start off with some China news. The country agreed to work with the United States, European Union, and other countries to collectively manage the risk from artificial intelligence. This was at a British summit on Wednesday, and it was aimed at chartering a safe way forward for the rapidly evolving technology. Let's have a look.
And here we are for the first time, really in human history, with something that's going to be far more intelligent than us.
Elon Musk expressed grave concern about the rapid development of artificial intelligence on Wednesday at the world's first major summit on AI safety.
It's one of the existential risks that we face, and it's potentially the most pressing one.
Musk said the aim of the inaugural two-day summit was to establish what he called a third-party referee to observe AI development and to sound the alarm if needed. Fears about the impact AI could have on economies and society took off last year when Microsoft-backed OpenAI made ChatGPT available to the public. Some worry that in time, machines could achieve greater intelligence than humans, resulting in unintended consequences. In a first for Western efforts to manage the dangers, China's Vice Minister of Science and Technology joined U.S. and EU leaders, as well as tech bosses, at England's Bletchley Park, home of Britain's World War II codebreakers. It was here the country signed the Bletchley Declaration, an agenda focused on identifying issues with AI and developing policies to mitigate them.
I firmly believe that we must be guided by a common set of understandings among nations.
In a speech at the U.S. Embassy in London, U.S. Vice President Kamala Harris called for urgent global action to address potential threats posed by AI.
From AI-enabled cyber attacks at a scale beyond anything we've seen before, to AI-formulated bioweapons that could endanger the lives of millions of people. These threats are often referred to as the existential threats of AI, because, of course, they could endanger the very existence of humanity.
The United States used the British summit to announce it would establish a new AI Safety Institute, which will assess potential risks. Harris's decision to give her speech and hold some meetings with attendees away from the summit raised some eyebrows, with some executives and lawmakers suggesting Washington was trying to overshadow Prime Minister Rishi Sunak's summit. British officials denied that, saying they wanted as many voices as possible. And later in the day, Sunak welcomed Harris to 10 Downing Street for dinner. She plans to attend the British summit on Thursday.
And just a quick recap of markets. Wall Street's main stock indexes rallied on Thursday on hopes that the U.S. Federal Reserve had reached the end of its tightening campaign. And this is while a raft of upbeat corporate updates added to the bullish mood. Here's a look.
Stocks on Wall Street rallied Thursday on hopes the U.S. Federal Reserve had reached the end of its interest rate hiking campaign, while a raft of upbeat corporate updates added to the bullish mood. The Dow rose 1.7%. The S&P 500 climbed 1.9%, while the Nasdaq added 1.8%. The Fed held interest rates steady on Wednesday as expected, and while Chair Jerome Powell left the door open to further tightening, he also acknowledged the impact of a recent surge in bond yields on the economy. Here's MJP Wealth Advisors President Brian Vendig.
Yeah, today's market is a bounce back, I would say, a little bit off of Chairman Powell's comments yesterday, where the Federal Reserve actually spent more time talking about demand and inflation in the economy versus interest rates. And I think that gave investors some calm in the sense of how they think about monetary policy moving forward, and that there's a lower probability of a rate increase this year.
All 11 major S&P 500 sectors rose, led by energy and real estate. In earnings, Qualcomm advanced nearly 6% after the chip designer forecast first quarter sales and profit above Wall Street estimates. And Starbucks jumped 9% after fourth quarter results topped forecasts.
And new information is coming to light in the Amazon FTX lawsuit. An unsealed version of the lawsuit reveals that Amazon made $1 billion through a secret price-raising algorithm. Let me explain, but first a bit of background info here. When the Federal Trade Commission and 17 states sued Amazon for antitrust violations this fall, there was a heavily redacted portion of the lawsuit that referenced a secret algorithmic pricing tool. But there were very few details on that at the time. Now, a newly unsealed version has fewer redactions to it, and it shows something pretty interesting. But it's a bit complicated, so stay with me here. Apparently, Amazon created a secret pricing algorithm to identify Amazon products that it thinks other online stores are tracking and products that it thinks other stores will follow Amazon's pricing if Amazon increases the price. And the point of all this was that after other retailers began matching or increasing their own prices, Amazon could continue to sell the product at an inflated price, and it wouldn't make them stand out in terms of pricing, of course. And newly redacted portions of the suit allege it has earned Amazon more than $1 billion from U.S. households. And former crypto mogul Sam Bankman-Fried was convicted Thursday of defrauding his FTX customers out of billions of dollars. And this is one of the biggest financial frauds on record, with Manhattan's top prosecutors saying the case should serve as a warning to all white-collar criminals. Here's more.
FTX founder Sam Bankman-Fried was found guilty on Thursday of defrauding customers of his now bankrupt cryptocurrency exchange. The verdict cements the 31-year-old former billionaire's fall from grace in one of the biggest financial frauds on record. During the month-long trial in a Manhattan federal court, prosecutors made the case that Bankman-Fried stole $8 billion from FTX customers out of sheer greed. The 12-member jury reached the verdict after just over 4 hours of deliberations. Bankman-Fried stood facing the jurors, hands clasped, as the verdict was read, with his parents sitting in the courtroom's second row. The jury convicted him on all counts, 2 charges of fraud and 5 of conspiracy. This verdict came just shy of 1 year since FTX filed for bankruptcy, a swift corporate meltdown that shocked financial markets. It also marks a major victory for a broader crackdown on white-collar crime led by Manhattan's top federal prosecutor, Damian Williams. Outside the courthouse, he told reporters the case should serve as a warning to all fraudsters who think they're untouchable.
Those folks should think again and cut it out. And if they don't, I promise we'll have enough handcuffs for all of them.
Bankman-Fried will be sentenced March next year and could face decades in prison. He's been in jail since August after the judge revoked his bail over likely witness tampering. His defense lawyer, Mark Cohen, said he respected the jury's decision. However, quote, Mr. Bankman-Fried maintains his innocence and will continue to vigorously fight the charges against him. But the MIT graduate faces yet another criminal trial. Prosecutors brought a second set of charges earlier this year, including for alleged foreign bribery and bank fraud conspiracies.
FBI agents searched the home of New York City Mayor Eric Adams' chief election campaign fundraiser, Brianna Suggs, on Thursday. And she was questioned by public corruption investigators, city officials, and local media reporters. Here's more.
The FBI is probing New York City Mayor Eric Adams' chief campaign fundraiser, Brianna Suggs, and raided her Brooklyn home on Thursday. It was part of an investigation into whether Adams' 2021 mayoral campaign was involved in a straw donor scheme receiving illegal kickbacks. The scheme allegedly involved the Turkish government. That's according to the New York Times. The paper cited a search warrant in its reporting. Reuters had not seen that search warrant, and the FBI did not respond to requests for comment. A spokesperson for Mayor Adams said in an email, the mayor heard of an issue related to the campaign and takes these issues seriously, so wanted to get back to New York as quickly as possible. Adams had cancelled travel plans to Washington, D.C. in light of the allegations. The New York Times, citing an unnamed person with knowledge of the raid, said Suggs was questioned by agents from one of the FBI's public corruption squads. Her social media says she's worked for Adams since 2017, starting as an intern in his office. Campaign finance disclosures say she raised over $18 million for Adams' successful mayor election campaign in 2021. With Adams running for re-election in 2025, Suggs has helped amass more than $2.7 million for his upcoming campaign, while public records show he paid Suggs consulting firm Suggs Solutions about $98,000 so far. Law enforcement has probed several associates of Eric Adams in recent months over alleged illegal donations and straw donor schemes. They've all pleaded not guilty.
And Apple on Thursday gave a sales forecast for the holiday quarter that missed Wall Street expectations. It was hurt by weak demand for iPads and wearables, sending its shares down about 3% in after-hours trading. Take a look at the details.
While Apple reported better than expected results on Thursday, it also marked a full year of overall sales falling and said the holiday season may not help turn things around. That forecast was dragged down by sinking demand for iPads and wearable devices like the Apple Watch. It's an unwelcome sign for the current quarter, which includes the Christmas holidays and are when Apple typically boasts its biggest iPhone sales. It disappointed Wall Street, which had instead expected the forecast to predict sales rising by nearly 5% over last year. But Apple told analysts on a conference call that sales over the holiday quarter would be similar to the year before. While Apple shares have risen 37% this year, they fell over 3% in after-hours trade. Still, Chief Executive Tim Cook said the company's new iPhone 15 models were doing well in China. That seemed to be an attempt to ease investor worries that Apple was losing market share in that country to a resurgent Huawei and other local smartphone sellers. Apple has navigated a global smartphone slump better than many of its rivals, but faces an uneven economic recovery in China, which is a key market. Revenue in China fell 2.5% overall in the quarter ended September 30th, but Cook says it actually grew year over year after accounting for foreign exchange rates.
And Starbucks leaned on the hype around its pumpkin spice latte and other fall-themed drinks in North America to surpass Wall Street targets for fourth quarter results, as demand for its pricey coffees defied sticky inflation. Here's the report.
Shares of Starbucks soared more than 10% Thursday morning after the coffee chain posted quarterly results that topped expectations, helped by its pumpkin spice latte. Starbucks also gave an upbeat profit forecast, banking on its updated store technology and menu enhancements. Demand for its pricey coffees remains strong despite sticky inflation. The return of the pumpkin and fall-themed drinks as well as new menu items helped drive U.S. same-store sales 8% higher in the quarter. Starbucks said the fall season launch led to record average weekly sales. Traffic at the coffee chain has also benefited from its younger, more affluent customer base prioritizing their morning coffee fix, even as the wider U.S. restaurant industry grapples with an inflation-driven slowdown. In the U.S., average spending per customer jumped as demand for its breakfast sandwiches, wraps, and bakery items increasingly became a regular part of orders. In China, sales rose 5%, which was in line with expectations. Globally, sales climbed 8%, exceeding forecasts.
Japanese Prime Minister Fumio Kishida said on Thursday the government will spend over 17 trillion yen, or $113 billion, on a package of measures to cushion the economic blow from inflation, which will include tax cuts. Take a look at the report.
Japan unveiled major measures to help ease the pain of inflation on Thursday. Prime Minister Fumio Kishida set out the plans. He said the package would total around $113 billion. It includes temporary cuts to income and residential taxes. Tokyo will also give payouts to low-income households and subsidies to curb gasoline and utility bills.
By putting together income tax cuts and wage hikes next summer, I want to ensure a situation where growth in household income exceeds the pace of inflation.
The government projects the spending plan will boost Japan's GDP by around 1.2% on average over the next 3 years. It said gasoline and utility subsidies will help push down overall consumer inflation by about 1 percentage point. Inflation has hurt Japan's economy and stayed above the central bank's target of 2% for more than a year. But some analysts doubt whether the tax cuts and payouts will help boost consumption and economic growth. One former Bank of Japan board member expects the measures to lift GDP by just 0.19% for the year. Other market watchers believe Thursday's measures could worsen the country's already stretched finances. The spending may force the government to issue more bonds, adding to Japan's public debt, which is the biggest among major economies.
And Boeing, one of the world's largest defense and space contractors, said on Wednesday it was investigating a cyber incident that impacted elements of its parts and distribution business and is cooperating with law enforcement. Take a look.
Boeing is investigating a cyber incident and faces a ransom demand. The aerospace and defense giant said Wednesday it was working with law enforcement following an apparent attack on its parts and distribution business. Days earlier, a cybercrime gang calling itself Lockbit said it had stolen a tremendous amount of sensitive data from the firm. It said it would dump the data online if Boeing didn't pay a ransom by Thursday. The demand later disappeared from the gang's website, and the plane maker wouldn't say if Lockbit was behind the cyber incident. Boeing said flight safety was not affected in any way. It did not disclose whether any defense-related data had been compromised. US watchdogs say Lockbit was the most active global ransomware group last year. It has reportedly hit 1,700 US organizations since 2020. The gang typically uses software to lock up a target firm's systems or steals sensitive data to use for extortion. Cyber experts say even paying the ransom demand would not guarantee that Lockbit actually returned or deleted the stolen data.
The holiday shopping season is in full swing, with the National Retail Federation releasing its sales forecast for the 2023 season today. Despite high inflation, shoppers are expected to spend more than they did last year. What is the best time to shop for deals?
'Tis the season of spending, and despite concerns over the economy, the National Retail Federation says consumers are ready to spend big.
NRF is forecasting that total holiday sales during the months of November and December could reach as high as $967 billion.
The holiday shopping season keeps creeping earlier and earlier. This year, it's for a very practical reason.
They want more time to find deals, and they want more time to really spread out that shopping.
With inflation holding steady, NRF Vice President Catherine Collins says holiday shoppers are more price conscious.
Shoppers are saying they will pull back in other areas in order to afford and prioritize their holiday shopping season. They will search for sales and deals and really look for ways to make every dollar count.
And where are they putting those dollars?
Gift cards were the top item that people said they were shopping for this year rather than specific products.
Another big trend this season, beauty and self-care products, thanks in part to influencer culture.
Shoppers are finding influencers and social media to be increasingly important when it comes to hearing about deals, but also discovering new products and things that they didn't know they needed.
As far as deals goes, Kristen McGrath with Retail Me Not says Black Friday shopping is still the best bang for your buck.
We tend to find the most deals and the best deals all concentrated around that one big weekend.
And November is here, and for those who celebrate Thanksgiving, the countdown is on, and a new forecast is revealing how much your turkey dinner could cost you this year. So which items will be more expensive or cheaper? Here's a look at why the star of the holiday meal is seeing a shift in price.
This year's Thanksgiving dinner is serving up some dramatic shifts when it comes to cost. Wholesale prices for turkey fell 29% in October compared to a year ago. That's according to Wells Fargo's new Thanksgiving report. The forecast is welcome news for turkey farmers and marks a major shift from last year when a wave of avian flu took out birds, leaving some farms struggling to keep up with demand, which led to higher store prices. This 2023, the Wells Fargo Agri-Food Institute says farms added 2% to 3% additional birds. And that robust supply plus a drop in the cost of refrigerated trucks to move supply from farm to store are contributing to the price drop. But get ready for some sticker shock because the rest of the meal will cost you more.
Everything else around it, all those side dishes, choose to spend wisely and shop wisely where you can.
According to the Wells Fargo forecast, canned cranberries cost almost 60% more compared to the same time last year. So opt for fresh cranberries instead, which cost about 20% less compared to last year. And right now, production costs for canned pumpkin are 30% higher this year from last year. Russet potato prices are at an all-time high, with prices up 14% from a year ago. So consider going for sweet potatoes instead. Store prices are only up about 4%. To trim costs, experts recommend scaling back.
Do you really need all that stuff? Who is actually eating this? Do we have a dish that maybe only gets 2 or 3 bites? Scrap it.
Well, it seems like everything Taylor Swift touches turns into gold, or rather billions. Swiftly moving through the ranks, the pop sensation has now joined the Billionaires Club. NTD Sean Marshall has more.
There are very few billionaire musicians in the world, and Taylor Swift is now one of them. Swift now joins the ranks of Rihanna, who became a billionaire in 2021, according to Forbes. Lately, Swift has been upping the status of the NFL with her arena appearances with other celebrities to watch her boyfriend play games live. Swift's concert film, Taylor Swift: The Eras Tour, hit a high note, earning $96 million in its opening weekend in the U.S. and Canada. This makes it the highest grossing concert film domestically for an opening weekend, says AMC. The Eras Tour could net $2.2 billion in North American ticket sales per Question Pro's August survey data, shared exclusively with CNN. This huge sum from the recent U.S. shows and a forthcoming leg next year could make it the highest grossing tour ever. Taking over Spotify also helped her achieve billionaire status. The streaming service recently announced on social media that the singer had become the most streamed artist in a single day in Spotify history. In 1989, Taylor's version became Spotify's most streamed album in a single day this year. Swift replaced herself as the most streamed artist record holder a year after she captured the title back on October 21st, 2021. Sean Marshall, NTD News.
And finally, the U.S. economy added 150,000 jobs last month. This was below expectations, but still a solid month of employment growth. October's job growth came in below September's stronger than expected total of 297,000 jobs. The unemployment rate rose 0.1% last month to 3.9%. The resiliency of the labor market has helped to keep consumer spending strong and the economy churning. However, Federal Reserve officials are hoping for more of a slowdown in order to help rein in inflation. And now here with me is the chief economist at the online job platform ZipRecruiter, Julia Pollack. So, Julia, 150,000 jobs added. To start off, what is the sentiment right now around this number?
Well, this number is lower than most people expected. And even if you account for the fact that UAW workers were on strike during this period, even if you pop those 25,000 workers back in, this is still a meaningful slowdown in the labor market. And the household survey is even more concerning, with a large increase in unemployment for young workers, an uptick in the overall rate, an increase in the U6 broader unemployment measure of underutilized labor that shows that workers are increasingly unemployed and underemployed.
So last month we got a bit of a higher number. This month a bit lower. So, I mean, are we on a trajectory? Is it clear as of right now that the labor market is cooling down?
Yes, I think it's sort of indisputable in this report. Every single key indicator of demand for labor weakened. The number of working hours and overtime hours fell. Wage growth cooled. It's really quite low at the moment. Over just the past quarter of the last 3 months, wage growth has come in at an annualized 3.2% rate. that's very, very low. 3.5% would be consistent with 2% inflation. And given how quickly productivity is growing, workers really are going to want to see stronger wage gains. These real wage declines are causing real disposable income declines. That's going to put pressure on consumer spending and could put further pressure on the labor market in the coming months.
So then what would you say is the number of jobs added where the labor market would stabilize at, roughly?
So the labor force has been growing at around a 200 to 250,000 a month rate. And so we shouldn't really want to see job growth below that. And arguably, there are further gains in labor force participation that could be happening. We know that women's labor force participation is a lot lower in the United States than in peer countries, for example. We know that there are many immigrants who want to come in and work here. So arguably, we could even see a larger number. 300,000 a month actually is looking like it's what we need to keep unemployment low.
And speaking of unemployment, the rate ticked up 0.1% last month. I mean, 1 month increase doesn't make a trend, but is there any reason to worry that it could become a trend?
Definitely. The diffusion index fell quite substantially from 61.4% to 52%. That's a meaningful narrowing in job growth. And typically before job growth falls across the board, it falls in specific sectors. And then there's sort of a ripple effect into other industries as well. So a narrowing in job growth should be cause for concern. The manufacturing diffusion index, so the measure of the breadth of job gains in manufacturing, actually was below 50. It went all the way to 42. It dipped well below 50, which suggests that there are more manufacturing industries, sub-industries, losing jobs than gaining jobs right now.
I have a question here. Should we have any comfort in knowing that perhaps if the unemployment rate gets too high, perhaps the Federal Reserve may consider cutting rates, and then that could potentially give a boost to the rate there? What are your thoughts here on this dynamic?
Absolutely. So I think we should take enormous comfort from the fact that this slowdown is not taking place because of any real fundamental weaknesses on balance sheets of businesses or households. It is purely an orchestrated slowdown by the Fed. And so if rate hikes end, if the Fed starts cutting rates next year, we will likely see not just a stock market rally, as we're already seeing today on the expectation that that could happen, but we'll see hiring unleashed as well. Many companies are sitting on the sidelines. They're not doing investments right now because they don't pencil out at these rates. But there are lots and lots of businesses that want to grow, that want to expand, and that will do so once interest rates come down again.
Okay, just final question. Do you think the rate cuts, whenever they are coming, do you think it will coincide with uptick significantly of unemployment rate?
So not necessarily. I mean, I think that even if inflation just continues to come down, once we hit 2%, I think the Fed will start to reduce rates because rates right now are not neutral, likely. They're restrictive. And so the Fed would likely move back to a neutral rate once it felt that its inflation target was sort of sustainably met.
All right. Thank you so much, as always, Julia Pollack.
Thank you.